Good evening and welcome to Taking Stock here on ENCA. I'm Bruce Whitfield. We're looking at a post-COVID environment. We're daring to lift our heads above the parapet as we look at the motor vehicle industry. South Africa has always been a hungry market for motor cars, failing public transport systems, and a desire to be seen to be flashy have driven consumption of motor vehicles into stratospheric levels at various times. But there's been an absolute slump. Tonight we'll look at the second-hand car market with the chief executive of AutoTrader. We'll find out from the banks as to why they are worried about lending in the current environment. And finally, to one of South Africa's biggest manufacturers and exporters of cars, Toyota South Africa, to find out about the local and global motor industry. Well, up first this evening on Taking Stock is George Mienie. He is Chief Executive of AutoTrader. Used to be South Africa's best-known magazine when coming to dealing with second-hand cars. They closed the magazine in 2017. Fortuitously, now they all went digital and online. And I'm hoping, for your sake, George Mienie, that has paid off over the last 3 years.
Well, thank you for having me, Bruce. It definitely has, whether fortuitously or not fortuitously. I suppose we find ourselves in a time where being a digital business is a positive thing. So closed it in 2017, and hopefully, we can look back on that in 2021 and say, well, that was good timing.
I mean, you are the Alibaba or the Uber or the Airbnb of car dealing, because you don't own the cars. You are the facilitation. You're the platform where people can advertise their cars, and cars are bought and sold, and you make money as the go-between in that transaction. What have volumes been like? I mean, are people buying and selling cars at the moment?
They definitely are, Bruce. So, it's a good description. You know, we are the Airbnb of the automotive world, and that middleman that joins the buyer and the seller, or introduces the buyer and the seller. And, from the magazine days, very quickly, we could publish maybe 10,000 cars in that magazine, when we all know that the market is made up of many more tens of thousands of cars. So the digital world has allowed us to be about 20 times bigger than we ever were in print. So fortuitously, or as we mentioned in the beginning, I think that is a good thing, because we're able to reach scale. Now, with AutoTrader having reached scale in classified listings and now fast becoming a marketplace, I think the data that we sit on paints a nice picture, which is a proxy for the market. And we all know that the used car market is about over 2 times bigger than the new car market, especially in today's times. So I'd like to think that AutoTrader's data, being at scale, is able to be that proxy, for used car buying and selling trends. And if I had to answer your question, it's booming. People are buying used cars more than they ever have before. In July, we grew by 55% in visits to our platform.
Visits is one thing. I mean, I've been to your platform and I haven't bought a car. Not ever. Last time I bought a car was, I don't know how many years ago, because I'm a cheapskate who likes to live vicariously. Lots of people go to browse and to shop around and to have a look. They don't necessarily actually transact. What's happened to levels of transactions?
Well, that is exactly right, Bruce. You might be browsing a website, and that's why I say putting a website head-to-head based on traffic could be a vanity metric, because at the end of the day, it's what translates into the sale. We have seen inquiries to dealers selling cars increase year on year by north of 15 to 20%. So that traffic increase of 55% is translating through the funnel to inquiries to car dealers. And then you might ask me the question, well, how are car sales going themselves? How many cars are dealers selling? That has taken a knock in July, but it is growing month on month from May into July, June, July, and now into August. That is a growing trend of transactions actually taking place. I mean, we've got things that are holding us back, like finance approvals potentially, where people have lost their jobs or their incomes have been halved, and And we're a car-faring nation. We don't have a good public transport infrastructure. A new car is under pressure because the consumers are tightening their pockets, and they're going for used car. And we're in this perfect storm of a nation that has to drive.
So when you look at the fact that then you see an uptick in second-hand car sales, has that happened in this particular crash?
It definitely has. Like 2008, 2009, we're seeing a very, very similar pattern of behavior. There's three things that are happening. The first thing that's happening is new cars under pressure and consumers are opting for used. And then within our data itself, besides the big growth numbers that we're seeing, consumers are also searching for sub 200,000 Rand cars more than they ever have, which then shows a consumer that's potentially under pressure. It doesn't mean that the 3, 4, 5, 6, 700,000 Rand cars are not growing, because they are. But I suppose there's a lid to every pot, and people find themselves in different financial pressures, no matter where you are on the lifestyle scale.
But when we look then at demand in that segment, the below 200,000 Rand segment, I mean, there must be desperate sellers in this market, people who have unfortunately lost their jobs or their circumstances have changed and they've suddenly realized they need to get the best possible price they've got for a car. Have you seen desperate selling? I mean, is it possible to gauge the difference between a desperate seller, and a really desperate seller?
I think there is definitely pockets of desperate sellers. I mean, in the data itself, the only thing we can point to is price deflation or price inflation. If we have price deflation, that is an indication that there is desperation, because used car prices would drop. And we saw that in May. We saw price deflation of negative 4%. Cars were being undervalued or underpriced in the marketplace. We saw that turn around after June, and now used car prices are growing at single-digit 1% rates, which still shows me pressure, because it was growing pre-lockdown in the mid 2%. In terms of price inflation. So the fact that it's close to 1% shows me that there is that financial pressure or desperation still.
Is there anything in the world called a deal anymore? I mean, we can all have access to prices now. If we go online and we love a beige Toyota Corolla 1.6, whatever the model might be, we can go and find an accurate price for a beige Toyota Corolla 1.6 with low mileage and new tires, for argument's sake. We can all have access to that information. Is there such a thing anymore as a deal?
So when it comes to price, there's fast becoming no such thing as a deal. And that is, in my opinion, because of the transparency of the internet. Exactly what you alluded to. The transparency of the internet creates or causes price to become almost commoditized. Because it's all transparent, you can't go down the road and get necessarily a better deal than what you're getting from one dealer to the next, because every dealer, as well as every consumer, has sight of every price out in the marketplace. And the really good sellers are saying to the consumer, this is the best deal you're going to get, because you won't get a better price, but I'll give you all these other things. And so very fast, the deal is becoming less about price and more about value.
What's the difference? What is the difference? I mean, what is value in this world?
Value in this world is, being able to take the car back if there's a problem, getting extra warranties bolted onto the car, which effectively is a reduction in price because it costs to warranty that car. But the ticket price of the car is not necessarily the place that transparency allows people to play with.
George Mienie, thank you very much, Chief Executive of AutoTrader. In a moment, we're going to talk to one of the banks about why it is that they're being so tight-fisted with money, giving you money to buy a new car. Certainly, it's to the benefit of people like George, but if you're in the brand new car market, you want car financing to be happening. And we've seen some pretty big cutbacks there. We'll talk to one of the banks next. Well, on to the head of business strategy and analytics at Absa Vehicle and Asset Finance, to Henry Botha this evening here on Taking Stock. We just heard from George Mienie, and we hear from lots of other people in the vehicle market, that banks aren't lending anymore. And I mean, it's a broad sweeping statement, but I'm guessing that your risk aversion is certainly being felt in the vehicle market.
I must say it's more a case of who's applying for finance than who's denying finance. I think as a vehicle finance or any white goods, you need confidence in order to buy that vehicle. And we've actually seen since the lockdown has ended that there were a lot of pent-up demand for vehicles that has come back. Those volumes came through in June. So the recovery in June was bigger than what we thought it would be. Yes, there was a 30% plus decline in new vehicles sold, new vehicles specifically, for June and July. But if you look at vehicles between the ages, used vehicles between the ages of just a few months old up to 2 years, there's some brilliant value in the market. And that's where we've seen a 20% increase in customers applying for finance for those vehicles.
So it's a very big shift in trend, and that trend is the one that we often see in times of economic distress, where people need new vehicles or want new vehicles. It's more, it becomes a need at times like this. Suddenly, a 5-year-old car can last 6 years, or 7 or 8 or 9 or 10, depending on your tolerance for breakages. But when it comes to the data, I mean, it was like driving into a brick wall, April, because with the hard lockdown at the end of March and for the whole of April, I don't think a single car was sold, or was it in April?
No, I think there were a few pre-orders that were just the transactions were concluded, but they definitely weren't vehicles on the back of trailers being delivered to houses or being fetched from a dealership. So, I mean, that one was essentially a 0 month of car sales, and that's dramatic. So in May, there was a bit of vehicles sold, about 30% of what we would normally sell in the month of May. And then June was kind of the new normal. Licensing offices opened up, your places where you need to go for roadworthy certificates, they were opened up, the dealerships were opened up, but it was completely different. You couldn't go and visit a dealership when you wanted. You needed to make an appointment. You couldn't fetch your vehicle. They needed to come and deliver it to you. So I think we're all looking forward to a new level 2 where everything comes back to normal.
Yeah, we certainly hope it does. I mean, but again, it comes down to economic stress and distress and our belief in the future. The data points that you've got as a bank, because in as much as you look at what has happened, it enables you to project into the future as well. Yeah. That future must look very different now to what it looked like in January.
Correct. With the best scenario we could find to compare it with was the global financial crisis. So, and currently, after 2 months of new normal, it compares very what happened in global financial crisis. Your consumer is the first one that stops buying, but also the first one that starts buying again, whilst your more commercial vehicles take longer to go into a downward cycle and then longer to come back out of it. So we've seen the consumer returning. They are buying vehicles. I mean, it's difficult not to make a purchase decision if you've got the need, with interest rates being at 1970 levels. I mean, back then the rand was twice as strong as the dollar. So it gives you an idea of what type of scenario we are in. That's not the case today, but if you can buy a vehicle at a 5% fixed interest rate over the 72 months period, it's difficult to deny that and not go for it.
But yeah, from a corporate perspective, I mean, car hire companies have been badly damaged over the last couple of months and are not going to recover anytime soon, not at least until we get proper business travel going again, proper tourism going again. I'm sure the car hire companies are not buying new vehicles for a foreseeable future. We're certainly not seeing Uber drivers gearing up either dramatically anytime soon, because their business has shrunk quite dramatically too.
Yes, it has. I was quite surprised climbing into an Uber this morning with a J number plate, which means it was probably the last new vehicle sold into that market. The rental market usually accounts for close on 15% of vehicle sales each month. So that's about 6,000 units a month. Over the past 2 months, it's hardly cracked 100 units. So that's 15% decline in vehicle sales just because the rental companies aren't buying it. They are defleeting, and that's what's giving the brilliant value to the consumer. But the rental companies won't continue like this. At some point, tourism will return, the vaccine will come in, rental companies will buy again. I think what the consumer will experience maybe a year or 18 months from now is those great value vehicles won't be in the market because of this extended period that the rental companies didn't buy vehicles.
You could be a second-hand car salesman. You really could. If the banking thing doesn't work out for you, you could tell people to go out and get their deals now. Because, again, in these times of distress, what does happen is you have vehicles flooding onto the market, and those with cash or able to get a loan are able to do so. Have loan requirements changed in any serious way based on this massive trauma that we've seen in the economy? Are you being more careful as banks?
So we must be more careful. Bruce, we must be more careful. So we do look at, okay, what can we do? What vehicles should we finance? For what amount should we finance? Is the consumer still able to afford this? So take a closer look at their salary slips. Has it seen a reduction? Do they have variable pay? Many things like that. But the distress that the banks are experiencing now is not because of the finance we're doing now. It's because of the finance we did for the past 3 years. So you can only close so much without closing the bank. So it's not worthwhile to completely say no now, because that's not the consumer that's got you in trouble.
Yeah, I mean, so how do you see us emerging from this crisis? You talk very optimistically about vaccines and tourism returning, all of these things, which at best is a year away. In the short term, I mean, in the next 12 months, things remain hairy, I suspect. I mean, if we hope that we would come out of a 3-week lockdown and bounce back to restaurants, parties, and late night jauls, whatever that might be, you're going to be sorely disappointed. And the next 12 months are probably worse than the last 3.
Yeah, no, if I go back to the global financial crisis, it took us 18 months to get new car sales back to where it was before the crisis hit us.
This economic contraction is potentially 5 times worse. I mean, if this economy contracts by 10% this year, which is possible, it's more likely to be 7 to 8%, but that's still 4 times worse than the global financial crisis. I mean,
Correct.
It is much bigger than that.
It is much bigger. I think we've also been a bit more pessimistic in forecasting how this crisis is going to hit us, which usually happens during this time. You're at the worst, you're forecasting the worst. We were surprised the past 2 months just how much better it looks than what we forecasted. Whether that will put us into a W curve of recovery, that question I think is still unanswered, or whether that puts us onto a slow recovery, that question is still out there.
Henry Botha, thanks very much for chatting to us on Taking Stock this evening. In a moment, we'll talk to the Chief Executive of South Africa's biggest motor manufacturer and the huge disruption that's hit Toyota South Africa in a moment. Well, on to Andrew Kirby this evening. Andrew is the Chief Executive and President of Toyota South Africa. Toyota has been manufacturing vehicles in KZN since 1970. It's a long-standing exporter of vehicles into the European and African markets outside of South Africa. And of course, it's Toyota Corolla's the most popular car month on month in South Africa. And they sell thousands of units here every single month, or at least they used to. There's been this terrible drop-off, Andrew Kirby. What happened to the operations of Toyota South Africa from March when the lockdown started?
Yeah, hello, Bruce. Well, I think it's obviously very challenging for our business, as it is many other sectors. From the start of the lockdown, we ceased all operations, 0 sales, 0 production. Of course, we had to stop everything. But we were part of level 4, where we could have 50% employment levels. And so during the month of April, we prepared for that. And from level 3, we were then able to build up to 100% employment levels.
But we must have seen the entire Toyota network worldwide. I mean, this is the first big, proper global calamity that's hit every single country at exactly the same time. I mean, there must be lockdowns across every operation in the world.
There have absolutely been that. I get a report every day of what's happening around the world with our plants. And this is absolutely unique. It's incredible. Of course, it impacted on our supply chain as well. Supplies went down as well. In the beginning, it was a big concern around components we receive out of China. But then, of course, it moved to other parts of the world, to Europe, where we get a lot of parts, and then to some of the Asian countries as well.
There was this massive dislocation in global trade. People blocked off trade. People didn't want to export because they were worried about future supply needs. People didn't want to import because they were worried about how long the virus would live on packages and parts. That seems to have settled down, though. I mean, are you back to as normal as you can be in terms of supply chains, getting spares in, being able to build cars from scratch and ready them for export?
Yes, we have fully recovered. And to be honest, even from the beginning of May, although there were some challenging times, we never stopped the production plant because of supply. So all our suppliers were very, very supportive, and we had very good open communication, and we were able to all continue running. Right now, there are no issues at all in terms of supply.
I've seen some stuff written around the world about just-in-time production, and the Japanese, of course, perfected this just-in-time production. Why sit with 100 carburetors when you only need 10? So deliver 10 the day before they need it, and then pop them into the car and get the next 10 the next day. Is that model changing in the world or not?
From our point of view, we receive from many of our suppliers here in South Africa on the same day as production, within 4 hours of production. So if they stop, 4 hours later, we stop. The big change, though, is to try, in addition to that, have minimum touch, minimum move. So we also try and reduce the number of times we are moving things around, be it vehicles or parts, to get that efficiency into the whole supply chain, because it's a critical part of our competitiveness and how cost effectively we can manufacture vehicles.
When you look at the global supply chain and then the supply chain in South Africa, and South Africa, of course, has been badly traumatized by the effects of lockdowns. Lots of businesses have suffered. There's been a real concern about going back to work. Have they been able to keep up their end of the bargain to you?
Yes, in terms of the suppliers and our whole value chain, yes, absolutely. So we had quite a strong belief that we should be supporting our employees, supporting our communities, supporting our value chain before we even focus on our own sales and production recovery, and put a lot of effort to make sure. And I personally was committed to making sure that we didn't lose one dealer and one supplier during this period, and we haven't. We've been able to keep everybody in the black, so to speak.
But your market is shrinking. I mean, there's huge pressure across the African continent, which is a large part. I think 35% of your exports go to the rest of Africa, 65% to Europe. Europe seems okay. Africa is struggling. And then in South Africa, we were just talking earlier to the banks about this. I mean, it's all about Uber drivers and car rental companies, which their demand must have hit a wall.
Absolutely. I mean, this is an unprecedented time. You know, our market in South Africa is down 36% so far as of the end of July. We think the end of the year will end up between 30 and 35% down. So very, very challenging time for all of us. We are fortunate in that our exports into Europe are recovering very well. And that looks like it'll only be about 10% below what we achieved last year. The rest of Africa, though, is in the opposite position. They'll be down 40% compared to last year. And we think it will take them well into 2021 before they start recovering.
I mean, when it comes to the vehicle industry in South Africa, and you, Mercedes-Benz, BMW, Volkswagen, of course, are the primary producers of motor cars in South Africa. You've got very good deals with government that allow you to manufacture and export at decent rates. I mean, is South Africa still a place from which you intend to manufacture for export to these markets for the foreseeable future? Considering things, for example, like another round of load shedding recently causing absolute havoc.
It is challenging because, of course, we need to create and we need to have an investor-friendly environment, and that's certainly been a challenge. But we're still very positive about the future. We think we'll overcome the challenge that we currently face. I did announce in the investment summit last year that we are investing in a new vehicle to manufacture here at the end of 2021, and we are still on track to do that. We had some difficulties because of the pandemic in sourcing the tooling out of China, so that put us back a little bit. But we are fairly committed to sticking to those timelines, and we still think it's a viable investment. So we are continuing to invest in South Africa, and we think that there's good opportunities. But of course, it is challenging, and we sometimes take a couple of steps back before we take, steps forward.
And certainly, so unlike SAB and Heineken and Consul, for example, which between them cancelled 13 billion rands worth of capital investment, you're continuing to expand the business in South Africa for future export. Thanks to Andrew Kirby this evening, who is the President and Chief Executive of Toyota South Africa. My thanks to Andrew Kirby at Toyota South Africa, also to George Mienie at AutoTrader and Henry Botha at Absa. Thank you very much for joining us this evening, and thank you for watching some fascinating insights into the motor industry. It's the backbone of South Africa's industrial production at the moment. It's a very important export market, and for consumers in South Africa, of course, and large corporates, it's an absolutely critical backbone too. Thank you so much for watching this edition of Taking Stock. Till next time, bye-bye.